Hey all, welcome to ShareTreck. This is Raj here. Just started the live stream in the nick of time, so really happy about it. Yeah, today the future seems to be looking much more optimistic than I would have thought they would, but that's okay. We'll see what happens as the market opens. For today, I've been looking at a bunch of news articles and trying to find out what could be the direction of our markets. And invariably, that brings me to look at the most prominent headlines around the Trump tariffs. So I'm thinking that having issued formal letters to leaders of 14 countries, including Japan and South Korea, we are going to start seeing the response from those countries now. Trump has announced a 25% tariff on imports from these nations effective August 1st. This is an increase from the previously announced 24% rate for Japan, and it comes with a stern warning. Any retaliatory tariffs from these countries will be met with even higher tariffs. But friends, the fact remains that the person who pays the tariff is basically the American consumer. With unemployment going up and cost of living going up due to tariffs, the American consumer, who is taking the load of the entire world, is going to find it very difficult to keep going. The move has sparked concerns about renewed trade tensions and the potential for a broader trade war, especially as Japan's government called the latest tariff salvo regrettable. And markets are bracing for the impact on global supply chains and US manufacturing, with particular focus on autos, steel, and critical minerals. These developments are already weighing on sentiment, with the Dow, S&P 500, and Nasdaq all dipping yesterday as the news broke out. But this morning, I'm seeing green shoots again. S&P 500 is up 0.14%, Nasdaq is up 0.26% as we speak. Seems like it's going to be a green open, especially after the sell-off yesterday. There could be a little bit of bottom fishing, but will it withstand throughout the day? We have to see that. And the US Treasury yields are climbing for the second consecutive day, with 10-year note yielding 4.41% this morning. And investors are reacting to both tariff headlines and ongoing concerns about the fiscal impact of President Trump's recent tax and spending bill. So that I would like to show you something out here. This is the 2-year by 10-year spread, which has gone up above 0.51% once again. And if you look at the 20-year yield, it's at 4.95. 30-year yield is at 4.95. Both of them are inching towards the 5% mark. And as you can see here, it's been 4 continuous days of green candles moving upwards, breaking a resistance trend line for the 30-year and the 20-year, as well as for the 10-year. Because if we were to draw the trend line out here, which we were using before, we broke above this trend line. Now this has become a support. This was a resistance before, and now it has turned into a support. So this is how the line was before. So we have got 2 more days after we have crossed this line of resistance. So this has been confirmed as a support. And if we stay above this today, I think we'll be confirming this as a support. You'll also see golden crosses forming out here, ready to form. Like 9-day has already crossed the 200-day. That's not a good sign for the direction of the yields, in my opinion. And the uptick in yields reflects growing uncertainty about inflation, economic growth, and the Federal Reserve's next moves. Fed officials have voiced concerns about potential for weakening labor market and rising prices as a result of administration's trade policies. And I think with all of these factors put in together, and if you look at the yields, the way they are going, when the yields go up, what it means basically is that the demand for those bonds are going down, and therefore the price of the bond is coming down, and the yields now appear to be a higher percentage of the price of the bonds. This is not a good sign, which would probably mean that if US is going to try to fund any of these bonds again, then the Fed will have to buy those bonds, which is again like a quantitative easing or printing more money, which will reduce the value of the dollar, which we can already see in the dollar index as the dollar index continues to go down. So that's the vicious cycle we are looking at. And market participants are now pricing in 2 rate cuts by year and most likely in September and December. When rate cuts happen, currency exchange rate goes down. So USD is going to face more downside risks going forward, which will make imports expensive. And on top of that, people have to pay around 20 to 25% tariffs. So that is the reason why the Fed is holding on to their powder, because if Fed already cut rent rates, cuts the interest rates, and inflation continues to go up, they do not have any ammunition. And that's the reason why they are just holding on. They want to see that this doesn't turn into a stagflation situation where they have to choose between their mandate to keep employment up and to keep inflation down, because both of that will be in conflict. Now, the National Federation of Independent Business reports that small business optimism index ticked down to 98.6% in June from 98.8% in May. This decline is being attributed to a surge in small business owners reporting excess inventories and ongoing worries about trade tensions. Only 49% of owners described their business health as good, a drop from 55% in May, and the share of those expecting improved sales over the next 3 months fell as well. The uncertainty index, while down 5 points to 89, remains elevated by historical standards, with many firms citing trade policy as the key source of anxiety, and there is no signs that it's going to be abating anytime soon. And in between all of these, I think private equity is trying to make money and small businesses are getting crushed. Case in point is that despite broader market jitters, family offices and private investors are ramping up their bets on biotech and healthcare, because in June we saw a surge in deal making with notable investments targeting innovative biotech startups and pharma firms. This trend reflects a search for growth and resilience in sectors less exposed to tariff risks and global trade disruptions. And this is good news for the genomic sectors, because even if we don't get a long-term investment, there's a chance to make some money out of this. Notably, investments have focused on companies developing new therapeutics and cutting-edge health technologies, signaling continued confidence in long-term potential of the life sciences sector. So expect some bids to come in for our genomic companies. So that is some positive that we can see. And for today, I think what we have to watch is the volatility at the open as traders respond to the latest tariff headlines and rising bond yields. And also export heavy sectors like auto, steel, and technology could see outsized moves. And we have to keep an eye on further updates from the NFIB and any Fed commentary for signals on economic outlook and interest rates. So I think it's a mixed bag today. We'll have to see what happens when the market opens. And here we have the S&P 500. And I'm looking at, let me just pull this chart out here and have a look at, I think that you still can't see my cursor. I've tried everything possible, but OBS does not pick my cursor. I have seen other channels showing their cursor very clearly. I'm going to keep trying, and hopefully I find a solution within a week or so. But right now, I think I'm going to describe where my cursor is. I'll remember to do that. Now we are looking at the S&P 500 futures, and my cursor is on top of this green line of support from before, which was at 6,283.00, which actually is going to perform the role of support today, because right now we are at 6,286.25. And we have this diagonal line of resistance which is coming up from before, and that's going to perform the role of a resistance today, and it's going to be at 6,306.25. And there has been no change in our divergence as such, and RSI has cooled off a little bit. That's a bit of a positive. Bullish momentum is also stable, and MACD is tending towards the signal line, ready to cross over to the bearish side. So right now we are poised on a razor's edge. We don't know which direction we are going. The 9-day exponential at 6,240 is likely to be the next level of support for S&P 500. When it comes to NASDAQ, we have this diagonal line of resistance from before, which is going to put a resistance for us today for the NASDAQ futures at 23,139. And our 9-day exponential sitting at 22,754 is going to be a support for us today. Again, the divergences have not changed. The bearish divergence remains. And MACD is tending towards the signal line, ready to cross over to the bearish side. RSI has cooled off and momentum seems to be flat at this point of time. Again, we have to see what happens when the market opens. Pre-market activities generally do not lend to the same direction when the market opens. Dollar index has recovered smartly at this point of time. It's up 0.01%. It's gone above this line of resistance and converted that into a support at 97.28. And our sentiment continues to be bearish. MACD has improved, but momentum is still quite low. And as I spoke to you about the yields, they're all tending towards the 5% mark when it comes to the 20-year and the 30-year yield. That's not a good sign. Next, let us look at the indicators themselves. S&P 500 for today. I think S&P 500 is going to have a support, which is going to be the 9-day exponential at 6,181. And the resistance is going to be this diagonal line of resistance at 6,295. That's the range for today. And we are still waiting for the bearish divergence to resolve itself. And it doesn't seem to be happening. Maybe today could be the day it might happen. And I'm looking at the chat window. Oh, thanks to Inf for joining us. Good morning, Inf. And I'll continue with this and come to you towards the end of the session. VIX is up. VIX is down 4.44% as of yesterday. And pre-market also it is in that low level. And we have a resistance out here at 18.26, and also the 9-day and the 21-day exponential are resistance. So it's really surprising to see the volatility subdued so much before the opening, given that yesterday the letters were sent. Maybe sending of the letters and not hearing anything back from those countries has given a false sense of security, but I think this is a false sense of security. We'll hear from some of those countries sooner rather than later. And even if we don't hear from those countries, it means that on an average around 20% tariff is what a US consumer is going to pay for anything that is imported into the United States. And many things are imported into United States. And that would create situations that are going to be recessionary or deflationary, recessionary, because the inflation will take place, and as a result of which there'll be layoffs and there'll be a drop in consumption, and all of those things are going to push the US economy into either stagflation or a recession. That's the ultimate game, I think. Now, gold is down 0.43%. So all of these seem to indicate that probably we'll see positive actions in the stock market today. It's counter to what I generally believe, but that's what it looks like. And as you can see, QQQ is up 0.27% in pre-market trades. And we had a resistance today at 554.16. We are just on top of it right now. So I'm going to leave this as a support. 554.16 is going to be a support today, because I am thinking when the market opens, we'll already be above 554. And then let us go on to look at the put call ratio, which is almost neutral at this point of time. And then I'm going to go and have a look at AI. And NVDA is up 0.75%, back on top of this diagonal line of support that we have been running on. And I think we are marching towards our target of 162.54. Smart move by NVIDIA. And again, we still have the bearish divergence in place. And I don't know when it's going to resolve itself, but we can't keep on going overbought, and I don't think that's the way to go ahead. So fall is coming sometime sooner rather than later. I'm just out of the market. I'm fully on cash, mostly on cash. And you can see Meta also is up 0.40% today, and the 9-day exponential of 716.70 is the support for today. And we have Google up 0.42%. Again, this diagonal line of resistance from before is going to become support for today, and it's going to provide support at 175.67, and our resistance continues to be 180. And we have Amazon, which is up 0.28% in pre-market trades, and this diagonal line of support from before continues to be the first line of support for today at $221. And we have Apple, which is up 0.06% in pre-market trades, and it's going to get resistance at, it's a minor line of resistance. I'm going to mark it orange, and this resistance is going to be at 213.41, and our support is very strong at 207.30 because it's along with the 9-day exponential. Next, we look at Microsoft, which is up 0.03%. Very strong movement by Microsoft. My MSFT is suffering big time, but I'm hanging in there for the time being. Microsoft seems very strong today, and we have resistance at 499.17. Presently, we are at 497.88, and the 9-day exponential at 493.12 is going to perform the role of a support. Even Tesla has gone up 1.07% after a drop of 6.79 yesterday. I would attribute this to dead cat bounce, and we still have a resistance at 297.84. Presently, we are at 297.20. If we break above this, then we have the 200-day exponential at 299.95 offering some support to us. That said, Oracle is up 1.35%, and it will get support at 230.21. AMD is up 1.62%, and it's going to have support from the 9-day exponential at 136.67. Presently, it's at 136.90, up 1.56% in pre-market trades, and it has got a resistance which is going to be at 143.54. SMCI is also up 0.28%, and Broadcom is up 0.66%. The 9-day exponential at 268.54 is going to be the support. And InFed asked me yesterday about Palantir, and I had closed the live stream by then, so I'm going to answer that question. Let me look at Palantir and see where we are. Earlier, we had plotted a target of 160.71 for Palantir. That is gone because we had a steep drop out here. Now, this would have been a bear flag, except for the fact that we had this huge green candle from yesterday. So the bear flag thesis is gone. So what I would do now is I would like to take a line from here and connect all the low spots and mark this as a new bull channel. And our support for today is going to be 133.32. And before that, we have support from the 9-day and the 21-day exponential, which is ranging from $136 to $134. So there's a whole lot of support out there for Palantir, and it's going to continue move on this diagonal line of support unless otherwise. And the sentiment is bearish. We have to note that. And also we have got the MACD, which is bearish, trying to move towards the signal line and recover to the bullish side. Momentum has picked up strongly. So I think for today, Palantir could remain positive by the time we close. Everything depends on any news coming from any of these countries and retaliatory actions, because China is already talking about retaliating with supply chain disruptions. If we get prominence for those news, that could upset the market. So nothing is very definite. Things are a little bit uncertain. And for SMH, we had a target of $303.96. We are still moving upwards, and pre-market we are up 0.50%, and today's support is going to be 280.39. Right now we are at 281.15. Failing which, we have the 9-day exponential at 276.74, providing the next level of support. Our bearish divergence still persists, but it has to start manifesting sooner rather than later. I'm just waiting for it to happen. 0.83 is the gain. 0.83% is the gain for Tempus AI in pre-market trades, but our resistance continues to be 59.39, and that's going to be the resistance for today. And support for today is likely to be the 200-day exponential at 61.47. That's 61, sorry, 53.78. 53.78 is the support. That's where the 200-day exponential is. So that kind of brings me to a close of everything that we wanted to do on AI side. Let me quickly see if Inf is asking for anything more. No, nothing more is there. Okay, now let's go on to genomics and see what's happening out there. We are seeing a gain of 2.11% in Prime. Prime has moved smartly. All of those people who have been having faith in genomics and holding on for a longer period, I think all of you have an opportunity to make a decision now. Are you going to sell calls, or are you going to take partial profits, or are you going to take profits and get out of the genomic sector until things clear out? Sentiment is absolutely bullish. MACD is super bullish. Momentum is overbought. Some consolidation is due out here for Prime. And we do not have any new news other than insider purchases. That's all there is. Everything is sentiment driven. Entelia is up 1.07% today after dropping 4.56% yesterday. I would attribute that to a dead cat bounce, and the support continues to be a 9-day exponential at 9.98. And Caribou has got no trades pre-market, and Beam Therapeutics is up 2.45% after dropping 4.15% yesterday. Again, I would say it's a dead cat bounce happening. Our support is 19.05 for today, and Altimmune is up 0.68% in pre-market trades. It had dropped 2 consecutive days, so this could be a bit of a dead cat bounce, some bottom fishing out here. Sentiment is bearish, MACD is bearish, and momentum is also below average and dropping. So I don't know what this little bit of optimism is other than a dead cat bounce. Verve Therapeutics is stable. It's down 0.36%. It's very range bound. It's already got a deal with Eli Lilly, so it's going to stay there. Then we have Editas, which is up 0.39% after 2 days of drops. Again, I don't think it's got much strength out there. There is no new news out here for Editas to jump up on. The support is from the 200-day exponential at 1.93. And then we are looking at Illumina. Illumina happens to be up 0.59%. As I made a recent video recently, I said Illumina is a pretty good company to hold on. And I was saying that probably China may remove Illumina from the blacklist. But one of our viewers, Hot Dog, who follows China very closely and has been to China many times from Australia, he's been saying that once in a blacklist with China, you don't come out of the blacklist. So I'm going to defer to him because I don't have that much idea about China. So I would discount that aspect of my commentary earlier. But all said and done, Illumina still looks pretty good. It has divested all the problems from Grail, and it is looking pretty decent right now. It's at the cutting edge. It's also an AI play, and the future is going to be a convergence, in my opinion, of genomics, robotics, and AI. When you put all of those things together, I think Illumina is going to be right in the center of the whole thing. That said, let us look at CRISPR Therapeutics, which is up 0.39%. Again, a very smart gain. We have created a cup. If we create a handle right now, that's going to be a huge catalyst. I'll just show you what I am seeing. Let me just pull this out, take the brush. Why is this not working? Okay, I have taken the brush and okay, here we go. I got the arc here. I take this from here to here. So we have a cup. Now what we need is a handle, and once the handle happens and gets triggered, then we could see a lot of gains for CRISPR. So it's too premature to count the chickens. We'll wait for it. But right now, I think CRISPR needs to do a little bit of consolidation. Allogene has no trades pre-market. Grail is up 0.13% in pre-market trades. PSEV is up 2.04% in pre-market trades. And it's going to get a support at around 1.48, which is the line of support that we have here. It's going to be for today at 1.44 because this is a dynamic line of support. ARCG is up 0.62% today, and minor line of resistance at 24.70 is going to be the resistance for today. And the support is going to be the 100-day exponential, which is at 23.15. Vertex is flat in pre-market trades, but I expect Vertex to gain today and convert the 200-day exponential into a support. And we have Ginkgo Bioworks, which is up 1.41% in pre-market trades. The 9-day exponential at 10.98 is the support, and the 100-day exponential at 8.87 is the resistance. So that's all I have here, my friends. And I'm going to look at Precision once more. It's traveling nicely on this bull channel, and we are waiting for a FDA approval in August. And as we go closer to the date, I would like to probably get into a small speculative position to make some gains out here. That's the reason why I've still kept it out here. And Eli Lilly continues to go down. It's staying around the median out here on the regression channel. So if I pull this regression channel out, you will see that we are very close out here. So it's a consolidation happening. That's about it. My friends, that brings me to an end of today's live stream. Hi, Hot Dog. How are you? Any commentary from Australia about the trade wars, tariffs? Please put that in the chat section so that I can get some wisdom from you guys as well. And if there are any stocks that you want me to have a look at, I would like to do that. Now, I think there was a stock called KELV that David Best was talking about. Let me see. There is no KELV. Let me see what he said. I'm going to just quickly check my comment section out here and look at what David Best was saying. KALV. So it was KALV. KALV all and NASDAQ. Let us check out what KALV is all about. The name of the company is CalVista Pharmaceuticals. CalVista Pharmaceuticals. So this is what attracted our friend David Best, the gap up and the huge candle out here. And as I can see, the bullish sentiment is mending towards becoming, bearish sentiment is mending towards becoming bullish. It's still bearish or neutral right now. MACD has moved right away from the bearish into bullish, and momentum is already overbought. RSI is overbought out here. And what we have here is a rating, outperform rating by Leernick Partners to $18, raised to $20 from $18. There's a bunch of upgrades. Jefferies raises CalVista Pharmaceutical price target from 40 to 40 from 32. Again, a positive increase in price. CalVista Pharmaceutical up 17% on pace for largest increase in September. Data talk. So yeah, there is nothing other than analysts which are saying that this is going to be great and their clients are putting money into that. That's all I am seeing. Here we have got one important news. CalVista Pharmaceuticals shares rise on FDA approval of hereditary angioedema DUG. And it says received approval from the FDA for its treatment called Ectorly, also known as sebetralstat. The drug is a plasma kallikrein inhibitor that aims to treat acute attacks of hereditary angioedema in adults and patients as young as 12 years. The approval follows positive data, etc., etc. Oh, this is good. This is good. But again, this is not a once and done solution. So the shelf life is a bit limited because we'll have a once and done solution coming from Verve or somebody like that. And that could change the game. But right now, I think the share already, whatever profits could have been plugged in, have come in. There is this huge gap up out here. And remember, it's the price target may be $20 or $18 or maybe even $40. But that's not a given. That's an analyst price target. The market has to speak. So I would say that at this point of time, the smart money has already made the money. Now the risk reward is probably evenly poised at 50-50 for further moves upward, in my opinion. But we'll see what happens as the days go by. But thanks to David Best for bringing this to our attention. Now, who else? Is there any other comment out there? No. Okay. So friends, I would like to end this video here. The only thing I would say is that it's really sad that we are building up tariff barriers, and this is going to reduce the margins for many companies. It's going to reduce the sales volume for many companies. It's going to give to a raise of retaliatory taxes in various countries, and overall employment is likely to go down, and this is going to push adoption of AI, and therefore AI stocks may see momentary gain. But at the end of the day, unless the governments come up with a solution for providing income to the large number of people who are going to be educated unemployed, as well as a large number of people who are less educated but doing skills like driving trucks, driving cars, driving taxis, or working on the checkout, or loading materials. Even dealers in casinos are likely to be replaced by AIs. So I'm thinking that at this point of time, it's very important for governments in advanced countries to link some kind of revenue generation which can be distributed to the general public with companies who are adopting AI large scale, so that we have a level playing field, or else it's going to create a whole lot of economic problems. And for us investors, we can stay with the AI bandwagon. That is my personal opinion. But the AI bandwagon is to cool off some time. And also we are potentially likely to see currency fluctuations starting, because if the US dollar, which is the reserve currency, starts getting weaker, it's going to create tectonic shifts across the board, and that could have a whole lot of other impacts. So I'm thinking that overall everything is very volatile for my interests, and especially as a retiree, I'm really fearful of what's going to happen to all that my wife and I worked hard and saved. Can we preserve the value of all our savings and investments, and will we be able to fund our golden days? That's the big question, and government policymakers have to step up. We can no longer elect representatives who are not intelligent and who are not serious. We need thoughtful people who can look at this overall problem, see the train coming around the track, and take evasive measures to avoid a catastrophe. Well, friends, that was my my thoughts for you, and I'll catch up with you again in the next video. And till then, bye for now.